This video is for educational purposes only and should not be considered financial advice. Trading flashcards. Train like a pro. One of the most effective ways to boost your trading confidence and accuracy is through repetition. Just like in sports, the more reps you get, the better you become at executing under pressure. In this video, and others that will follow, we're introducing a powerful tool to help build your trading reflexes, trading flashcards. Intro. Entry criteria. Examples. Trading flashcards. Recap. Intro. As traders, backtesting is key. But to make the most of your backtesting and sharpen your live execution, it helps to train your visual recognition of setups. That's where flashcards come in. These visual snapshots of real trading scenarios help embed patterns into your subconscious. When similar setups show up during live trading, you'll be able to spot them faster and act with greater confidence. You can revisit these flashcard videos anytime as a way to reinforce pattern memory and build rock-solid confidence in your entries. Entry criteria. In today's flashcard session, we'll focus on a setup that we've covered in several videos before, ICT's Level 2 entry of the market maker model. Level 2 is one of ICT's favorite setups. Why? Because it's quick, leads directly into Level 3 expansion, and often delivers a high probability move with a solid reward. Here's the breakdown. First, we'll look for a liquidity grab at a point of interest. Then, after a level 1 is created, which is a swing level that breaks a previous swing, we'll next look for a level 2 to form, which is another swing level that breaks the level 1 structure. For an entry, we're going to watch for price to retrace to around 50% of the level 2 impulse leg, with a liquidity grab or a price rebalance. Instead of blindly entering at the 50%, we wait for an opposing swing level to form after the liquidity grab or the price rebalance. We then enter at the close of the third candle in that opposing swing level, the classic 3-candle formation. Examples. Here's an example. Let's say price hit the 238 Fibonacci extension level after taking out the previous day's high. From there, we're going to look for a lower low to form after a higher high. That's level 1. Price creates another lower low. This is level 2. The move retraces and we monitor the 50% zone of level 2's impulse leg. Once we see a swing high form, confirmed with the 3 candles, and a liquidity grab or price rebalance, we enter at the close of the third candle. Trading flashcards. We're going to go through a series of flashcards, and after each flashcard, we're going to show the trade you should have taken. You can use any information on the chart to help you, such as dates and times, and it also helps to count the market maker model. Let's look at the first flashcard. Here is the lipstick, as ICT would say. We see price reached a level 3 of the market maker model and then continued downward, and it terminated at the 500 Fibonacci level. It broke a trend line and then created a level 1, a level 2, and then the entry is at the liquidity grab after the level 2. Then price shot up to a level 3, but we're looking for it to reach into that liquidity void. Here is the next flashcard. Again, you can use any information on the chart, and you can mentally draw your trend lines and count your market maker model. Here's the chart with the lipstick. We see price reached a 561 Fibonacci extension. Then it broke a trend line, created a level 1 and a level 2, and then retraced to take the liquidity of the swing high created at the level 2. Then price moved down to the level 3 and then created a whole nother market maker model on the way down. But what we're looking for is price to reach the origination point, the level 1 area. You can also use time to help you in this decision. As you can see, the move down for level 2 happens around the 12 noon time period. And then during the rest of the New York session, it turns over and creates that level 3. This is an hourly chart. Even though that's not delineated, you can still recognize that this is a larger time frame because of the dates that the chart takes up. Here's our last flashcard. Again, use the market maker model, trend lines, and any other information that you can see on the chart. Here's the lipstick. We can see how price created a trend line and then broke it, creating a level 1, and then finding support at level 2 on the larger trend line. We've reached the 500 Fibonacci level, so we're looking for price to go down. And then after liquidity was taken on that swing high right before level 2, price moves down again, but does not go all the way down. This is where trading can be frustrating because you're expecting the move to take that liquidity from the trend line. But if you look and see when that happens, it happens after price breaks that stronger trend line and then creates a level 1 and a level 2. And that level 2 happens during the New York session. And that's where you look for another entry. But you still could have entered off of that first entry because it fit all of the criteria. And your stop loss was still safe at that swing high created after level 2. Recap. Using flashcards is a simple but powerful way to get more reps with your setups, just like an athlete or a martial artist drilling their techniques. In this video, we focused on the level 2 entry of the market maker model. Be sure to review this setup and stay tuned for more trading flashcard videos. By popular request, I've launched a Patreon where I share my weekly trades and show exactly how I apply my strategy in real time. Plus, I've set up a Discord channel so you can ask questions and learn with others. I'll be checking in each week to answer questions and offer insight. If you've been wanting to dig deeper and grow as a trader, this is a great way to start. Check the links in the description and I'll see you inside.